Good afternoon, friends. This is going to be the last episode of the FinNext series, which we are running since last 2 months. We have three important speakers going to tell us what's next for fintechs. 2 months back, since we were getting a lot of views from the fintechs that the funding winter is actually making a lot of fintechs think the otherwise because the investors are not pumping in capital. The regulatory environment was not also very appropriate, maybe till yesterday, because yesterday only the RBI guidelines came. So we decided to do a special series called FinNext and try to understand what's next for fintechs. In fact, with the same title, FinNext or maybe Fintechs at Crossroad, we are doing a big event in Bangalore next week on 15th of June. So if you're in Bangalore or if you are ready to travel to Bangalore, please feel free to join us. Just register yourself on the ETBFSI website, and we'll be there to discuss what's next for fintechs at a large level and at large context. But today, while discussing FinNext, I have three important speakers from the world of fintechs, which are going to tell us how do they look at fintech space and what's the outlook for fintechs. So, friends, let me welcome my speakers for today. My first speaker is Soparno Bakchi, COO of Balance Zero. Soparno, glad to have you.
Hi, Amol. Thank you for having me. It's always a pleasure.
Thank you. My next speaker is Mr. Ramaswamy Iyer, founder and CEO of Vina Network. Ram, glad to have you.
Yeah, hi, I'm all great to be on the show and obviously meet Suparno, you and Parikshit. Great, I guess,
Yes.
discussion on next thing for fintechs, I guess.
Sure. And my next and the last speaker for this panel discussion is Mr. Parikshit Chitalkar, co-founder Stashfit. Parikshit, glad to have you.
Thanks, Amol, and my fellow panelists. Really glad to be here and looking forward for an engaging discussion here.
Sure. So, gentlemen, the common question that we have today is what next for fintechs? And this question comes with the background of funding winter, the regulatory environment. Also, those investors thought that perhaps the fintech companies which will list in the market will showcase a greater market value. That also didn't happen. And majority of the fintech companies operating in either payment space didn't make lots of money, nor in the credit space because of the regulatory environment and major other things. So that's combining all together. The question came very specific that what's next for fintechs, and that's why this discussion is. So let me shoot this common question to all of you. What's next for fintechs according to you? And Soparno, let me come to you first and take your views.
Yeah. So thank you, Amol. I guess it's one of the most fundamental ways to kind of again look at that entire sector. So the way I'll mention is like Amol, at a fundamental level, at a first principle level, nothing has changed. So if you're trying to solve a problem which is a value to the consumer, if you're trying to solve a problem for India and Bharat, if you're trying to solve the problem of actually the mandate of financial inclusion, nothing fundamentally has changed. But at the same time, there has been a reset and rewiring, not just in the terms of like access to capital. It's also about the regulatory and overall the way the industry has evolved. So if we are kind of adaptable to the rewiring which has happened over the industry, the fundamentals still haven't changed. The bright spot still at the, even if you call this like a bit of a momentary tunnel, at the end of the tunnel, the light is actually a bright light. It's not of an incoming train. So for sure, the fundamentals, the demand, the opportunity to make a difference with fintech, expanding the horizon of financial inclusion, all those things remain same. So the fundamentals are same. If the first principles still stick to the ground, then it's still a considerate, very deliberated and considered view of the right things which are there for the fintechs. Now, what that means to decode a little more, it means that uh, any sort of an investment, any sort of a direction which the fintechs are going to take, will have a more sustainable and deliberated view. That means like when even an experimentation also is happening, even an innovation is happening, it will be more on the parlance of innovation and not just creativity. It will also have a very keen focus of domain, in the sense like with all due respect, I don't think a fintech can be conceptualized, a product can be conceptualized by just with the philosophy of a high-tech industry or an e-commerce industry. So if you keep these two parlance in mind, the focus and the merit of the domain and the business of financial services in specific, and the assurance, the first principles in terms of the demand, the first principles in terms of making a difference to the customer's life has not changed. So all the fintechs would be in the right direction in terms of creating the opportunity and tapping into the opportunity.
Okay, noted your points. Parikshit?
So, I generally agree with what Suparna said. I think, two parts to your question there. One is this whole concept about the funding winter, right? I personally believe that, if you look at the fundamentals, there is never seasonality for good businesses. Capital follows a clear supply demand structure, and you will always see capital going towards the best possible return profiles. And I don't think that changes given any environment. It may slow down a little bit, move up here or there. Also, a lot of exuberance that we saw in the funding environment in the last couple of years was also led by what was happening in America. There was a zero interest rate environment in the US. As interest rates have come back, capital allocators also have to recalibrate their return thresholds. And that's why you can see that there's largely a slowdown in the speculative type of early stage investing. But for companies that are actually delivering profits to their shareholders, this is actually a great time to be in the market, because there's a massive flight towards quality. And if your fundamentals are correct, if you were building a profitable business that was delivering value to your customers and therefore also benefiting your shareholders, I think there's no seasonality to that there. Also, it's a great time from a regulatory standpoint. I mean, we've been at the receiving end of a lot of regulatory changes that are happening very rapidly. Are some of those changes very quick? Sure, one can complain and one can agree towards that, but generally those are beneficial to the overall ecosystem. I don't think there is any regulation that the regulator has come up with that's not commonsensically correct as to what is right for the consumer. If you look at the digital lending guidelines, they're basically saying like, listen, are you licensed to lend money? If yes, tell the customer that you are licensed to lend money and then lend the money. And if you're not licensed, then don't do it. So, right. So that actually helps clear the playing field. It helps people that are trying to do innovation in the right spirit and ultimately benefiting the customer. Also, one thing that people miss around why building a profitable business from the beginning is very important is profitability gives you this added advantage of being very clear in your thought process. There is no pulls and pressures that you have to deliver something that may or may not be fully aligned to your vision. So I think what is happening right now is that with the regulatory changes that are coming in, with the change in dynamics around funding, it is a right time for the businesses that are set up with the right fundamentals that are designed to deliver value to the customer and to their shareholders to really rise and shine in this moment. So I think it's a great time to be in this space, and we are really looking forward to building this out further.
Sure, Parikshit. Ram?
Yeah. Look, I mean, just a couple of caveats. I come from the B2B world, which probably is slightly different, and I only know the lendtech space and fintech. So I think there's the insurtech and a bunch of other things. So I'm not so well equipped or experienced to answer that. But I think fundamentally, if I look at fintechs, I've been at it from 1994, I think we kind of did the technology innovation, we have done the distribution innovation. And I think the key thing really is for us is, I think what's changed in the world for us, at least, I think, is that without manufacturing, and in our case, it's always being a source of credit, it is very difficult to kind of scale up your numbers. And I think that's one realization that's come into everybody, which you've seen even venture capitals, private equity guys, and many players in the field are realizing is that, and like, what's already happened on the e-commerce side, right? Where everybody's making their own generic brands now because that's where they get their margins. I think there is a need to kind of be also in the manufacturing space rather than just being in the distribution and technology space if you really want to kind of make the numbers grow. I think the key question also is that how long can you take the CAC for, the customer acquisition cost for, especially as you start progressing from the easy low-hanging fruit. At least now in the business world, small business world, it's all the guys who have GST ID, for example. As you start going below and below and below, and the ticket sizes get smaller, where is it that you're really going to get money if you're not in manufacturing? Right. So I think those are a number of issues that kind of strike us at the same time when this funding winter and everything else probably has come in, and to the regulatory stuff. And I think a lot of us who try to get into manufacturing without a license to manufacture, I think which Parikshit was talking about, the clarity that yes, you cannot manufacture if you don't have a license to manufacture, I think is come on at the right time, I think. But I think as from the B2B Lentech perspective, I think the demand is incredible. I will agree with Soporno. The problem statement has not changed. I agree with Parikshit that there is a tremendous amount of still innovation that we can do. I think the question really only for us is that we'll have to kind of marry the manufacturing side to the distribution side along with the technology we have if we really want to kind of make it a very large business. And I think that's the key, at least on the B2B Lentech side.
Okay, sure. Noted your points, gentlemen. So let me be very specific now and try to learn what has happened. So this week itself, in fact, the major fear was about digital lending, right? I mean, because of many fintechs could not make money into the payment space, they got into the lending business. But lending also became a big challenging after RBI's guidelines. But now RBI has given this clarity. So, Soparno, first of all, how has this going to be translated specifically into the fintech space, because majority of the fintechs operating in lending space and they were looking for these guidelines, and the RBI has clearly said the risk can be transferred, right? That was a major factor under the FLTG now. How do you think this will impact, how do you think this will translate into the industry now, Sapan?
No, absolutely. And Amal, this is kind of hot press, right? It just came yesterday. So the way I'll put it is like the digital lending guideline itself was something which was in a way is a boon for the industry, because the industry, if you see it specific as digital lending industry as a subsector, we have had that challenge of a long tail. The challenge of the long tail, that means there are like players which are like visible, the players who had the right licenses to do the business, we are all okay. But we had the problem of separating the lemons out, because there was a long tail of unauthorized players, there was like cross-border interventions, etc., which really did not help the cause of building trust and reputation from the industry. There was an element of deficit which was there. What the digital lending guideline did was to actually kind of minimize that level of trust deficiency, create a standardization, create a kind of a platform where all of us as material and regulated players can actually be on the same page. And it's also easy for the customers to distinguish. Now, overall, if you look at it beyond the standardization and the customer protection aspect of it, the regulators, RBI, also was very clear in terms of the systemic risk. So there is a key element and part of the guideline was around systemic risk, and that's where a little more clarity was required in terms of FLDG setups, any sort of a paper guarantee. So what we see yesterday coming up from RBI is actually fantastic. Amol, the keyword is clarity. That's the keyword. So be it with the players, the regulators, ecosystem suppliers, or the investors, the keyword is clarity. And if I have to highlight two, three key things, one is the call out that it's not only the regulated entities, but also the non-regulated entities who are actually acting as loan service providers. They also could be participatory in terms of providing the coverage. Now, what that means, RBI had already said that guidelines and standardization in terms of taxonomy. Before the DLG, it wasn't uniform in terms of who is an LSP and what's the role play and the contours, how they can be defined. Now, that foundation was set by DLG. Now there is clarity that, you know what, even if you're a non-regulated entity, but as an LSP, you can be participatory and you can take on the risk. Now, the risk also is not just a risk which is at an individuality level. Yesterday, RBI also has clearly called it out, like in what shape and form you're going to actually give the risk, and it is going to be all encompassing. So there is no asterisk applied. There is clear visibility of in which shape and form you're going to cover the risk and in which terms. There are call outs in terms of like, let's say the duration you can call. But another key element is RBI has also called out in terms of the coverage, like the percentage you can actually, the percentage is capped in terms of the coverage. What is the risk which you can sign up for? Which, if you see in the longer term, also is going to help in terms of creating sustainable portfolios. On one side, we as fintechs, we are at the horizon of pushing the boundary of financial inclusion. We are at the horizon of taking risk. But if you are a fintech, and especially if you're a non-regulated entity and providing guarantee, you also need to own up the kind of portfolio which you are originating. So it's a very welcome step from the RBI that they have also put a kind of a percentage cap around it. Net basis, actually nudging the industry to ensure that, hey, we appreciate that just a licensing should not be a barrier. We appreciate technology innovation has to be at the forefront, but at the same time, you know what, guys, you need to have sustainable approach to it. It cannot be a portfolio which is like the edge of the risk, and if there is a cliff which is not transparent. So the regulator is very clear. So net basis, the systemic risk part of it, with the right kind of a balance, I believe it has been addressed by the circular which came yesterday.
Sure. Parikshit, would you like to also add your views on the circular? Because fintechs are kind of looking at it as a lifeline now. They believe that FLDG is back, and there is some clarity in terms of what we can do going ahead. So do you also want to add here, though you kind of briefed us in the first part?
Yeah, so, and my views there is that our view in the beginning was that if you want to act in this space, then you have to comply by the guidelines that have been laid out by the regulator. So we were a regulated entity since day one. That's how we built the business. However, I think it's also very important to look at this from a perspective of what is the intent behind the regulation. What are they really trying to do? We have to understand that the Reserve Bank of India is the regulator for India. It's not a regulator for fintechs or for lenders. It is a regulator for India. So their concern is to protect the Aam Aadmi, to protect Bharat. Therefore, while we can argue that some of these changes have come too drastically, things have been taken away, added, clarity took time. Now we finally have a large degree of clarity. All of this is with that intent to make sure that the common man is protected. So generally, the way I look at it is that they were trying to address three problems. One is specifically from a credit standpoint. One is that is the customer aware that they are getting a loan? Am I just walking into something and I'm using a particular app, and then suddenly 5 years later I go to buy a home and I realize that I've taken a loan of 500 rupees that I was not aware of. So first of all, that, right? Second is, who are they getting it for? Who will address this issue? So if something happens and the customer needs redressal, who are they going to go for? Are they going to speak to the fintech, or are they going to speak to the regulated entity behind the fintech, and where that handoff will be? And third and foremost is this situation safe and sustainable? How are you collecting that information? What type of strategies will be used in collections? All of those things are something that the regulator has been looking to standardize. And this entire series of guidelines, be it the DLG, be it the FLDG guidelines coming in now, is in that vein of trying to set this up correctly for the end consumer. And I think from that standpoint, it's a very, very welcome step. It will allow people to strike the right balance between innovation and sustained innovation, because as Suparna also mentioned that innovation has multiple areas, right? So I think and I hope that innovation that was happening towards the long tail, which was really pushing the boundaries of what is gray and what is black and white in regulation, will hopefully now cease for good. And that will really lay the framework for fintech companies, as well as it will be great for consumers. So I think this is a very, very welcome step, and looking forward to how this pans out.
Sure. So, Ram, let me come to you with a different question. We had to discuss digital lending partly because the regulator guideline just came yesterday, and that was a very crucial topic because everybody was looking for that clarity. But Ram, since you're working in a very different segment, which is maybe a trade finance or a supply chain finance, or similar to that, when we speak specifically about what's next for fintechs, tell us, how do you see the demand specifically into your segment, because you're catering to the small businesses, the micro SMEs and everything, and in fact kind of trying to democratize the access to all these people or the small businesses. Are you seeing a significant demand over there? If yes, then perhaps it could be a game changer for the fintechs to look at it. So that's why, what's next perspective, I would like you to tell us how's the demand over there.
Look, yeah, I mean, the B2B credit in India requirement is about $120 billion a month.
Right.
So the demand is there. And the demand will always be there because everybody wants the cheapest rate or the most convenient, and then mixture of both of that, right? So I think from a demand perspective, I think you are going to find that fintechs have a huge role to play in terms of distribution of the demand, whether you call it democratizing it or access to it or whatever it is. I think the clarity that yesterday's guidelines and the digital lending guidelines did, I think is, as I know, I think Suparno very rightly said, it brought clarity, it kind of put a framework, it gave the taxonomy, and as Parikshit said, it kind of made it safer for Aam Aadmi. Now, I think in the B2B world, the biggest issue really is that as you go down the chain to really micro and nano enterprises, the perceived risk by banks and NBFCs is quite high. And fintechs are trying to solve this problem by giving higher amounts of FLDG. So I think the short-term implication, at least of yesterday's announcement, is while it's exceptionally good that they've allowed non-regulated enterprises to kind of give 5%, I think the choice really still remains that if you really want to kind of democratize access to credit for micro and nano enterprises, you will need to either be a regulated entity, or you will have to find banks which are willing to live with only 95% of the risk still uncovered, right? Because they are expecting you to do the discovery and to substantial extent underwrite it. So I think those are the challenges that remain on the supply side of capital that we will have to work with the regulator as well as with the banks. 5% is better than zero. 5% is better than not knowing what you can do and what you can't do. So I guess from that perspective, I would say welcome. But I think there will be in the micro nano space. I think if you talk about India, 60 million enterprises or whatever is the number, because no census I think exists, are in the less than 1 crore turnover per year kind of mark, which means that these are all the guys who actually you should formalize credit to in some form or the other. And a very small percentage of them are covered by formal mechanisms like GST and everything else. So if you really want to kind of lend to them and what they can afford is only 12% a year, which is about 1% a month, not 18 and 24%, because in B2B you don't make that kind of margins at that level, then you really need to figure out how do you kind of get the big banks to come in and lend. It can't be NBFCs, it can't be people like even Fintechs. It'll have to be the large banks who have low cost of capital to come in and lend. And I think for the Vienna kind of players, I think our challenge really is to make sure that we can attract these big guys to come in and do small ticket sizes at far more perceived risk, where we can help them with a bunch of other things, but we'll also now have to give 5% risk, of course, but whether that will be enough to attract them. So I think those are the questions that we will have to kind of debate about reaching out to the Aam Aadmi on the micro enterprises level, the business to business level. And I think there are some challenges there I still foresee. I think RBI is going to treat this as an evolving document. I don't think they have done over the last 6-8 months is having a lot of interactions. I think every lobby that is there and every fintech has been there as a chance to present to RBI about what they want. So I think that's really welcome. I think they have taken a lot of that feedback into action, but I think they will still kind of keep on working at it. So I think from a B2B perspective, I think we are far better today morning in terms of what we should be doing. But I think there's still some distance to go away if you're talking about micro nano enterprises. I mean, everybody likes to talk about the Kirana wala, but I would just say there's a whole bunch of guys who are selling electrical, cement, small players. All of them will need access to credit. And I think fintechs probably represent the best distribution mechanism there right now.
Sure, noted your points, Ram. So let me ask one, again, a common question to all of you in terms of how do you see the outlook of fintechs, and with certain changes, maybe a big shock of funding winter, or maybe a positive or maybe a progressive steps from the regulators, what kind of translation it will have on the fintechs going ahead, and how do you see maybe the outlook for fintechs maybe next 2 to 3 years? Because what we saw also in the last couple of years is majority of the fintech founders, they raised the funds and also upgraded their cars and the homes, also upgraded to their new offices, right? They also paid gigantic salaries to the employees, which is again very good if it's a niche talent. But that was also one of the important factor which investor highlighted, and they looked at funding winter very seriously. So given this background and the big shocks, what kind of changes do you see now happening and will happen maybe in the fintech space? Uh, because when we speak, and Soparna, you said that are we solving the major problem? Because most of the fintechs also copied and cloned the business model, and almost did the similar thing to what everybody was doing. So I mean, my question is pretty long, but what's next? Do you think now will happen in the fintech space?
Yeah, maybe I'll start there. Amol, when you mentioned about the aspects of the funding, right? At the end of the day, it's capital is a key resource. So there are two levels it's playing on, right? One is it's at the global level, what's the play is happening, and one it is which is happening at the level of India and maybe at the sector of the fintechs. At the global level, if you see, it's the entire startup ecosystem which is going through a stage of rewire. Amol, let's face it, like the way we have seen the startup world globally, not just in India, in the last 10 years or last 15 years, there is a reset which has happened. And all of us here or otherwise also, if we are serious players to it, we should have that acceptance. And I think that acceptance has trickled down. Now, what that means when you have an acknowledgement of that, hey, there is a reset and rewiring has happening. There's happening on two levels. One, access to resources, which means like the capital part of it, which has a global public market play, global mature markets, how they're inflationary, and therefore the squeeze in the public market, therefore the ability in the exits, all that play is happening, but that play is more of mechanics. As Parikshit was telling earlier as well, right? Access to capital is still there. There is also innovation happening in terms of how, in which way you want to access to capital to run your business and to amplify as well. At one point in time, it was maybe potentially direct debts and the intervention and the cap table. Now, the alternate finance mechanisms are actually coming to the forefront. But what is also happening is there is a very, very clear understanding. And you mentioned about the founders, but the way I'll put it, it is like the entire ecosystem, how it evolved, right? It's not just the founders, it's also about the players, it's also about the investors, it's also about some of the regulatory controls which were there at that point in time and which is here now. Net basis, if you look at it, like then the lens is going to get deeper. When anyone is investing, they want to kind of see like, hey, is this business is going to get value? Are they going to ask for profitability from day one? Maybe not. And I don't think that's the right way to even do it. Even in enterprises, when you do entrepreneurship, the enterprise doesn't ask for break even from day one. So I don't think that is going to change in terms of with any unrealistic expectations. But yes, in terms of how you structure your business, what are the fundamentals? Are you actually going to get a value out of it? Or are you trying to monetize not based on value but based on data? Are you only going to have a monetization based on like saying a bit of a blue sky on cross sell? So those things will get recalibrated. There will be a lot of pragmatism. So that's for sure the way it is going to be. And what that means, that you will see the depth of solutions of fintechs are going to go to a different level. You will also see in the next 2 to 3 years there will be clear winners in terms of single processing, right? And especially in context of India. So if someone is a digital lender, you will see the key players are going to go deeper in that space in terms of their underwriting ability, in terms of their reachability. The depth is going to increase. Same way, if someone is in the wealth tech space, they're going to go deeper. And that phenomena possibly is going to be there in the next 2 to 3 years. And then thereafter, possibly you'll see a phenomenon of integration. There have been some keywords, some buzzwords appreciated, like let's say a neobank or a full service provider and all. But somewhere I believe it was little ahead of time. We need to get deep and thereafter expand. If you see the Indian consumer, there is financial deficit in all quarters, be it be a wealth tech as a solution, be it be credit as an availability, or you even insured, if you say insurance, distribution business of mutual funds, everywhere there is a deficit. So if I am a single customer, there is an opportunity for super apps, there is an opportunity for neobanks, but let's not put the cart ahead of the horse. So this is going to be possibly the phenomenon where you will see the depth and the single process establishment of financial services. They will first establish that how in a singular channel they can monetize, they can actually build their strength and DNA, and then there will be a matter of bit of a diversification or more excitingly collaboration to see that how the deficit, the financial service deficit of one single customer can be catered to. So that's the way I look at it.
Sure. Parikshit, what is your view in terms of the new model coming, new outlook for the fintechs from here onwards?
No, so I think there's a lot of obviously a lot of room for innovation because clearly, if you look at an individual's sort of persona and all the financial products that they need to consume in various sub segments of the market, there exists a lot of gaps. So opportunity to fill those gaps are across the board. Since we are closely related to the credit space, I think credit there's a lot of wood to chop. Penetration is very, very low. There's obviously a lot of expansion available. Also, if you look at payments, I firmly believe that UPI probably is the proudest achievement that we as Indians can call our own. It's really underrated in terms of how technologically complex it is and at what scale it operates, and how much it can go further. Things like UPI Lite and all that now coming in. So I think that's another area that we are just scratching the surface. Although it seems like it's ubiquitous, is everywhere, but there's a lot of things that are in the works that are still not there. And I think these are some things that will actually flow westwards as well. I think just on that one front is one occasion where we are probably a couple of decades ahead of the West in terms of the UPI framework. Nobody else has it, right? Similarly, wealth tech, I do believe that while generally people in the masses don't have a lot of access to be able to save and invest, but I think wealth tech will also now tend towards, what if someone wants to save 100 rupees a month? Is there a platform available for that? I think that innovation will also start to come in. But the common theme that I'm really looking forward to observing over the next half a decade or more is that the software to stitch all this together, we haven't even started thinking about that, right? There's some small innovations that are coming in, but how does this information freely exchange with each other? How does this all sit within the interoperable framework? This is something that I truly believe will come, and that's what will lead to the consolidation. So, how does your payments data, how does your payments behavior impact how you do lending? How does that impact savings? All that getting stitched together into a common platform, which by the way, something things like Aadhaar and UPI have shown us is possible. Things can become ubiquitous to a point that it's all a part of a unified solution. So that to me is the most exciting part. That while these singular innovations will happen within fintech in their siloed verticals, at some point in time you'll start seeing innovation that actually starts to stitch all this together, and that will really lay the foundation for massive economic growth in the country. That's something we're looking forward to.
So, Ram, you partly answered this question in terms of the democratizing credit for the small businesses, and you shared numbers as well. Whenever we speak about the small businesses, micro SMEs, and specifically MSMEs, quite a time I hear this word that there is a huge demand there. Uh, what will actually change going ahead financing the SMBs? Because now what has also happened is the large bank have been also lending aggressively for a non-secured segment. They are also keeping a sharp focus on the MSMEs. So what kind of opportunities do you see specifically in this business segment going ahead? Because on the one side, not only just fintechs and the tech companies are entering into it, but even the large financial institutions are also touching this. So what kind of changes do you see going to happen in this particular segment now?
I think I just want to touch a little bit on what Parikshit said, right? I mean, there is a tremendous amount of public infrastructure that India can be very proud of. And I think very often it is said, it is set the bar for innovation in India very, very high, because a lot of other white spaces that would have existed elsewhere in the world, if you think of something like Plaid, for example, in the US, India has account aggregation that kind of completely put nonsense to any idea of a private enterprise played in India, right? So that white spaces go away. So I think it kind of allows you to start at a very high level of evolution, your innovation part. So coming back to small businesses, I think one thing that we do see is really driving credit up is when everybody has to e-invoice. Now, e-invoicing has already been brought up to 5 crores. I'm sure the government is looking at B2C also getting e-invoiced. I think that will suddenly trigger off a tremendous formalization of the economy. It will kind of ensure that you can really understand and predict cash flows for small businesses, micro businesses. And that will make banks and everybody else really get into this whole ability to automate and to digitize the lending part to these small businesses. I think the missing piece that will really kind of ensure that this access to credit happens is, I would say, the legal perspective. Just making sure that you can actually recover monies, and if you can't recover monies, there is very strong ways in which you can make it a punitive for them to not repay. I think are those things that are in India is a little tough. If you go the formal legal way, the Section 138s and everything else, I think that's one area if we can kind of build on. I think the rest of the infrastructure, as well as especially invoicing, I think in the B2B world will completely open up data, as well as very credible data, as well as a lot of information for banks to actually start lending to. I think the question really at that point in time for fintechs will be what is the space that they're operating if the information is freely available and banks are able to automate that process. And I think that's the interesting question for especially B2B side fintechs to kind of think about as to what are the areas that they're going to really focus on. So, for example, for us, supply chain has been a very, very important component of framework to look at financing small businesses. And I think in the small supply chain side, there is a tremendous amount of discoverability that you can do in terms of how relationships have been created between all the supply chain people, how strong they are, and therefore can you kind of add to the credit a collection piece that is attached to the supply chain as opposed to going and collecting like any other lender would do. So I think that's one innovation area that at least we are kind of very focused on, whether we can start working at a supply chain level rather than an individual small company level. and
Hmm.
therefore make credit a lot more aggregated for lenders to be interested in. So,
Hmm.
you're lending to an automobile major for the entire supply chain as opposed to only lending to a few dealers or few suppliers. Then suddenly it changes the dynamics of the game, and that's, I think, an area that we are very keenly doing in terms of, at least watching. But I think, in general, I would say e-invoicing is going to be a big catalyst in kind of making large lenders getting interested in small scale lending.
Hmm. Okay. Noted your points. So Saparna, my next question is from where you had actually, said one interesting point some time back that, we were ahead of times maybe. And, in a lot of branding exercise of the companies that they did, a lot of fintech companies, they call themselves a neobank or some aggressive, rebranding has been done. But soon they realize that this is not going to happen. So, at one side, Parikshit also said about wealth management or the wealth tech companies. We have seen a great rally in insurtech businesses.
Yeah.
But now, given the fact that payment companies didn't make money, lending companies will have its own challenges, though the regulations have come and risks are being going to be divided. If I ask three of you, what is that one factor, will make fintechs in India really successful going ahead? Or what is that one mantra which all of them should follow? The way listed companies follows and works is working for the shareholders' profit. What is that one mantra which every fintech should follow going ahead? I will start with you, Sopar.
Sure. I think just working for the shareholders is a passe anyways for enterprises also, Amol, right? If in today's world, if we see like, are we going for like a single bottom line kind of a philosophy of the company, or it's an integrated bottom line between your people, your community? What is the purpose which you're driving, right? We say about the three P's, it's no more profit only. There has to be a purpose, there has to be people in it, and then profit will follow. If we if we if we give up that, then what's the fun of being in startup, being in a fintech? It starts with the purpose, it starts with the idea is like, are you able to make a difference in the lives of people? That's for sure. And I have worked for 21 years in enterprises. Fantastic work, fantastic realizations. But when you are in the startup mode, be it be fintech or otherwise, you are here for a purpose for sure. Extremely, you get extremely purpose driven. You get extremely focused on that. Hey, are you really making a difference in people? And then profits and all, obviously, key ingredient to it. If it is not integrated, then anyways, it's going to be not sustainable. That's the way I look at it. Having said that, the main thing from here to there, again, I'm a strong believer of like, if you have clarity in mind, think simple and see like what are the areas. Again, it could be that our good old friend of a 2 by 2, you just look at it, look through the lens of, okay, are you solving a problem at scale, and are you solving a problem of depth? If you have the interface of depth and scale, you know the answer, what you need to be there, like where is the opportunity for you to add value. We speak about lending, we spoke about, even Parikshit highlighted about wealth tech. It's a
Correct.
simple 2 by 2. Wealth tech, lending, these are the solutions which will solve at scale, which has the need to solve at scale, and which will also have an element of depth. When you're doing a wealth tech, when you're coming up with portfolio recommendations, etc., it's a depth of knowing the customer and creating your models and algorithm around it. When you are trying to underwrite, it's not about saying that, hey, like we are underwriting XYZ pin codes, but what is the depth you are doing? When we are saying like, hey, we are covering 97% of the pin code, but I know my depth in terms of the material business is 85% of the pin code, and I need to increase that. So the interface of depth and scale, and that's the way for fintech or for any startup who's trying to solve the problem, especially for a country like India, where demand is not the problem, but it's like how you cater to the demand is the real thing. That's the way it is going to be. You touched upon on payments. Amul, for payments, it's a little different animal the way I look at it from lending. Because lending, it's about like, you solve it in the right possible way, you create a good portfolio, you will still make money, that's for sure. uh, but when it comes to payments, there are certain contours, or let's say even constraints which have been put in terms of monetization. And I think the ecosystem, including the regulators and the government and authorities, have that fair view. There was a need for payments the way we have built in India stack. It is almost like the government giving you the levers of infrastructure. It's almost like you actually had to set up the broadband infrastructure before the mobile phone, and once the mobile phone was there, then the service provider. We're actually going in that kind of a trajectory when it comes to the fintech world as well. And payment has created the UPIs and the other integrated systems of India stack has created that infrastructure. Now the question is, you cannot sustain an infrastructure in a subsidized mode. Let's accept it. As of today, the infrastructure around is getting subsidized. We are claiming victory, which is fantastic. We are building on top of it, but at some point in time, the infrastructure also has to be self-sustaining. So the early signs, even what you have seen maybe a couple of months back, when the regulators also have come back and said like, hey, here in some pilot basis you can do some cross charges. This is the way maybe a merchant can be charged. So those are the early indicators. There is for sure a very pragmatic realization that the payment infrastructure net basis has to be self-sustained. It cannot be a subsidized business and an entity. We have PPI as a license, we have a payments business, and we have a lending business. And as of today, if I have to kind of really fire in all cylinders, I need to ensure that the payments business also is in a self-sustainable model. It cannot be a subsidized business. As of today, in terms of the value add, Amol, we are scratching just the surface. We have really not conquered cross-border. If you see the cross-border remittance, and especially for a country like India, is going to go leaps and bounds. And still it is like inefficient in terms of like how technology can play a role in terms of making it frictionless, as well as the cost which you pay. So that's a bright example. Same way the digital currencies are going to be give us a lot of opportunity to innovate and actually push, and the government also is looking on the same lines. But the question here is like, from the beginning there has to be some clear path in terms of the ability to monetize. Otherwise, as private investments, otherwise as startups, it's going to be a little bit of a barrier in terms of pushing the horizon on those lines, that's for sure. As of now, Amol, if I have to put an analogy, payments is like the salt in the food. If you don't have the salt in the food, it's not palatable. But you cannot serve only the salt. So that's the way I'll put it. So I'll pause there, Amol.
No, sure, sure. I think we all need a good meal for sure. No doubt about it. So, but no, I think you highlight really important parts, and thanks for adding the cross-border payment also, which is a good thing and in fact a remarkable thing when you speak about what next for fintechs. Parikshit, let me take your views in terms of in terms of the two three things that you think will certainly work for fintechs going ahead.
I think it boils down to clarity of purpose. What is it that you set out to do, and how deeply and thoroughly you analyze that, make sure that that plan is bulletproof, and then how long can you hold the conviction, obviously within reason, to deliver on that plan. So, for instance, our philosophy always has been that we are trying to build a financial services business powered by technology, as opposed to a software company that's trying to do lending. That distinction is very, very clear. We embody that distinction on a day-to-day basis, and sometimes it is you go through cycles where it is difficult to stick to that, but you have to do that. And therefore, if you have that clear lens, it makes the day-to-day decision making actually fairly straightforward, because you know that you have to build a product that is unit economics positive. And then you drive towards it, and therefore your product suite becomes like that. You need to make sure that the business is viable at scale. You solve the depth problem, the scale problem, as Suparno mentioned. So I think that fundamentally, if it's clear, it steers you in the right directions. It allows you to scale. Funding summers or winters don't matter too much beyond a point. So that's my recommendation would be that that's something that everyone should kind of imbibe in. What is it that you're out to do? Be very clear about that. Put a lot of thought around structuring that process, and then stick to it. But yeah, in general, I think I strongly believe that the infrastructure of financial services in this country is getting built. While I agree that things like payments can't be subsidized forever, but if you look at the technological innovation that's there, I mean, for me, it's hard to believe that a lot of UPI is still on-prem. That has not moved to the cloud. So once that starts to happen, it will not take as much money to continue to subsidize. So that will drop exponentially. So that subsidy effect coming out may actually be a little bit of a far out scenario as well, which is great for the country. It's amazing. So really looking forward to these things starting to come around.
Sure, Parikshit. Ram, what will work according to you for fintechs?
Look, I think with the space we are in, I think no country in this world has historically ever done anything without a very strong trade factor to it, right? I mean, buying and selling determines very often the economy, and I think the fact that we work with small businesses means that we also help in generating an employment in some indirect manner. So I think from a purpose perspective, I think we're very clear that anything that enables trade, and especially a profitable trade for small businesses, ensures that multiple such social criteria get fulfilled. I think the clarity that really is important in our business, especially where like in a country like India, where you have 60 million small enterprises, is that you have to have scale. Without scale, nothing works. And if you cannot do scale economically, India is a cost engineering market, not a revenue market. It's all about how do you control your costs. I think then you can set yourself up for really taking benefit of doing at scale, because then even the small 1 paisa, 2 paisa you will make on a transaction will be good enough because you'll have volumes for it. So I think that's very, very important. Third, I think that's very important to understand is that as a fintech, at least, I think the only question we ask ourselves every day is that who's going to miss us? And because we have to be very, very clear that are we relevant to the problem statement, and is it something that we're delivering that others can't deliver? Because otherwise a lot of the work that we do, if we think that banks can do only if they were more technologically equipped, or people can do if they're more agile, or if regulations were better, then really once those problems get solved, we are not needed. So I think we really have to kind of think in a very, very core level. Are we relevant? Is somebody going to miss us when we are not there? And are we doing it at scale? I think those are three things that at least we bothers us every day.
Sure, 100 your points. I'm sure the people those who are watching the show right now, and also they will watch later, because this is will be put on the website also as a recorded version, will get some meaningful insights from three of you, not only in terms of what's next, but what will make them successful, what are the new business models are coming up, and how actually the fintechs will use it as a significant point for a business model. Thank you so much, Soparno, Ram, and Parikshit, for sharing your meaningful thoughts here. And thank you so much, friends, ladies and gentlemen, for watching this show. I would request all of you to stay tuned to etbfsi.com and also join us in Bangalore next week for FinNext event, which is going to be one of the biggest event in the fintech space in Bangalore very, very soon. Thank you so much once again, everyone, for taking out time and joining us.
Hey, thank
Thank you.
you.
Thank you, Amal. Thank you,
Thank
Precious.
you.
Thank you. Thank you.
Thank you. Thank you.